they have been pretty aggressive about cutting prices, but seems to be working.
Cutting prices, cutting jobs, trying to make the revenues keep moving while they try to axe off pieces of their business, whether it's getting rid of units that they didn't want to have anymore, some of those profitable units, as well as really, focusing on their best products. And the result in the stock price over the course of the last year, of course, in the drill down, we always look at the company news, buying a stock on the move, and earnings give us that great chance to really see what's going on at the company. So you see it's been a bumpy ride, but the stock up 10% over the course of the last year. That ain't nothing. We'll add some dividend gains into there, and indeed, the dividend being boosted by this company. I think the thing that really jumped out at me most of all was continued sales growth for the company. So as they have cut product lines, the sales growth, the percentage of sales increase on a year-over-year basis, while it's come down in the last, consistently in the last 3 quarters, company is still growing sales, and that's got to be a good thing.
So Cisco is such a huge company. They do a lot of different things. If there was one product that was going to be most important at Cisco going forward, what would that be? Well,
the most important products, of course, is to have cutting-edge networking gear. But what makes the business really work for Cisco is also to have services growth with it. It helps them taking care of that gear, installing that gear, making the networking systems work. It's seen some real steady growth in their services business, and I think that's important because it sort of shows how sticky their business can be. So that's, what you see there is, frankly, just not a lot of change, and that's probably good news for Cisco. Services is growing at 12%, and you saw overall revenue, what did I say, growing at 4% last quarter. That means services is going to be a bigger part of their business. The cost cutting on products, but the growth in services show that they're able to sort of stay in the business of their customers.
We often talk about Cisco as a bellwether for what's going on in the global economy. We've seen other big technology companies struggling with all of the macroeconomic issues we're seeing around the world. You're not normally this positive. Is there something to worry about here?
There's always something to worry about here. So their sales in the Eurozone were weak, expected to be weak, maybe not as weak as had been expected. That's an analyst's game. I was surprised to see their growth in Asia being stronger because we've been hearing so many stories about a slowdown in China. But I think that, gross margins is something that's so important for this company. And their gross margin, again, year-over-year growth, that's where you see that price cutting, and you can't cut your way to prosperity. So while we'd seen some improvements in gross margin for the last 2 quarters, and that was positive, a reduction in gross margin, a small one, 1%, but still gross margin is a little bit worse for the business. That's not a great thing.